Though there's plenty of risk and uncertainty in financial markets right now, there's also not a lot of additional clarity into these risks, leaving little in the way of any excuse to drive markets meaningfully one way or the other. U.S. government funding and risk of another government shutdown, U.S.-China trade, and Brexit are some of the big ones out there, and we suspect we'll have more clarity in the days ahead. But for now, it's really about keeping an eye on major technical levels, which, despite the recent broad-based run in the buck, are confirming what should be trendless price action as FX rates hold within recent consolidations. Using the euro as a proxy for this insight, we can see the single currency has indeed been in retreat mode for what could be 8 consecutive sessions of lower highs and lower lows. At the same time, the market is back into a massive support zone ahead of the 2018 low at around 112.15, which could just be setting up for more of the same, with an imminent bounce taking us back into the 115 area, multi-week range high territory. And this is consistent with price action in the other actively traded currencies relative to the US dollar as well. On Tuesday, we did see the US dollar extend its run, trying to find some more fuel, possibly on the news of a deal on US border security that would avert another government shutdown. ECB Weidmann was also a possible source of euro weakness, with the central banker adding some gloom to the outlook for the eurozone economy. But overall, despite the euro extending its run of declines, we weren't too far away from daily opening levels into the close, and this was consistent with price action across the board. On Brexit, Theresa May addressed Parliament, but as per our updates, there won't be any votes on Brexit this week, and this will keep things in a holding pattern for the moment. Mark Carney did, however, help the pound off its lows of the day after talking expansion and the need for a modest tightening of policy to achieve inflation targets. The market will now look to digest the latest appearance from the Fed chair and get ready for Wednesday's calendar that features Aussie consumer confidence data, an RBNZ policy decision, UK inflation readings, Eurozone industrial production, and US CPI. That's all for now.